obligation to sell either that stock index or ETF. And again, 100 shares, sellers of options are basically, short the contract. The put side, it's a little different. And if you're not used to calls and puts can be a little confusing. I mean, when you buy a put, it's straightforward. You're buying the right to sell the underlying, just like the calls, you're long the contract when you buy it. I think it's the put seller where it can get a little bit confusing. You sell a put, you're basically taking on the obligation to buy that underlying at the strike price. All right. We'll go through an example, but same thing. You sell a put, you're short the contract. All options have specific contract terms, standardized terms. One of the key differences between buying a stock index or ETF, options expire. I think, that's pretty straightforward. So again, we're contract specific with a stock index or ETF. Each contract corresponds to 100 shares of the underlying. The strike or exercise price, is option specific. And then expirations. We got lots of them. We got a lot of options that, last a day, a week, a month. And, listed options can go out to about 2.5 years. They can even go beyond that when you start talking about flex options, which are, customized options. Just a little bit of a broad background. There are 17 different option exchanges in the US, 6 parent companies. The industry basically lists, I think it's around 5,000 products at this point. And option volumes are crazy. Does anybody have a guess how many option contracts trade a day on the various option exchanges? Any guess? Anybody?
10 million.
10 million? Well, I appreciate the guess. I think 10 million was probably around the early 2000s. Okay. A little history in the industry. The industry started in 73. Option volume really started to take off in 2000 because that's when the first electronic exchange was founded in 2000. So, option volume, grew steadily throughout the early 2000s. There was a lot of volume with the financial crisis. Then things kind of dried up a little bit. We got up into the 10, 15, and 20 million a day average daily volume between 2015 and 2020. So in 2020, we were doing about 20 million contracts a day, since COVID, and certainly a combination of, people being stuck in their houses or apartments, coupled with the fact that option commissions, dropped dramatically. Option volume has more than doubled. The industry is doing over 40 million contracts a day. Last year, we averaged 43 million contracts a day. So it's a heck of an industry to consider, from an employment standpoint as well. Option volume is on fire, and I think, in addition to the fact that it's an efficient marketplace, commissions are low. I think that the education that a lot of the brokerage houses have done for the last 10 to 20 years has really started to catch on. People understand that these are dynamite financial instruments. And that's part of the reason we appreciate offering, some education to you all today to get a sense for this, for those of you who don't know much about options. So You know, part of it is they're a really versatile product. You can use them, to manage risk. You can use them for income generation, with covered calls, if you're familiar with that. Stock acquisition, like I said, you can buy calls, you can sell puts, depending on whether you exercise or get assigned, you can acquire stock that way. I don't have it on the slide, but then, people speculate with options as well. So lots of flexibility when it comes to options. So let's look at an example. XYZ December 15 calls out to 2024. The 45 strike price call at $5.50. So XYZ would be the underlying. The expiration date would be December 15th, 2024. The strike or exercise price would be 45 in this example. And then the price is 550. But remember, each contract corresponds to 100 shares of the underlying. So that 550, you multiply that by 100, every contract corresponds to 550 bucks. We good with that?
Yep.
Okay. And again, the idea of this presentation, core concepts. Some of you may understand this stuff already, but options aren't complicated. It's maybe a dozen different concepts. You understand it, away you go. One of those concepts is intrinsic value and time value. So you've got, and like any business, you've got your own lingo, your own language. Intrinsic value in the money, calls and puts. So in the money calls have intrinsic value, and we'll go through an example, to explain this further. In the money calls and puts have intrinsic value. They may have time value. You've also got at the money calls and puts, no intrinsic value, all time value. And then out of the money calls and puts, again, no intrinsic value, all time value. So, you can see on the right-hand side, you've got a stock price at 50 bucks. You've got $40 calls, $45 calls, ITM, suggesting in the money. Stock price is 50, so the 50 strike is at the money. And we're talking calls now. The 55 and 60 calls are out of the money. So for a call to be in the money, the strike price is below the stock price. At the money calls, right at that same price, common sense. Out of the money calls, the strike price is above the stock price. That's on the call side. So, what do these strike prices represent? A 45 call. 45 strike is, if you buy it, it's the right to buy stock at 45. The stock's at 50. That call's got to be worth $5. It's in the money. It's got $5 of intrinsic value, plus whatever time value it may have. The 50 call is going to be, the right, if you buy it, it's the right to buy stock at 50. No intrinsic value, all time value. Same with the 55. Whatever the value of that 55 call is, it's going to be all time value. And you may ask, well, how does the market come up, with prices for these things? Has to do with the Greeks. We're not going to get into the Greeks today, but I'll just mention them briefly. There are things like delta, gamma, theta, vega, and rho. And one of the keys is volatility. If a stock is very volatile, and again, common sense, but that's a lot of what options are. Stock moves around a lot. It's got a heck of a chance. Let's say the stock's 50 bucks and you buy a 60 call. That stock moves a lot. It's got maybe a heck of a chance to get to 60 bucks. And if you bought a 50 call and it goes to 60, that call's going to be worth an awful lot of money. So that's one of of the factors, one of the pricing factors, that's involved with, time value. How much does a stock move? How volatile is it? So you got in the monies, at the monies, and out of the monies on the call side. The puts, very similar. It's just upside down. You got the $50 stock price. The in the monies are the strikes that are above the stock price. Because again, what, the puts represent is the right to sell the underlying stock. So you got a 60 put, you got the right to sell stock at 60. We're talking about a stock price of 50, and you're buying a 60 put. It's worth $10. It's got $10 of intrinsic value, and then whatever time value it may have. So you just flip it over versus the call side. The out of the money puts would be the 45 and 40s. It's the right to sell stock at 45 or 40. With the stock 50, those puts are out of the money by either $5 or $10. So the strike price is below the stock price. Strike price is the same, obviously, for the at the monies. And then the in the monies, as I said, the strike price is above the stock price. So I hope that makes sense. Some of you may already know this stuff, but the whole point is understanding core concepts. You get an option, right away whether, it's in the money, at the money, out of the money. That's important. And then you can deal with the time value on top of that. Same thing, strike prices, what do they represent? Basically, I mentioned that. The 45 strike is the right to sell stock at 45. The 60 strike is the right to sell it at 60, and so on. Quick example, intrinsic value and time value, XYZ Jan 50 calls. Okay, so we're talking about an option for $5.20. That's the price of the option. We're talking the Jan 50 call. Stock price 53. Total option price $5.20. I hope you understand, that call is in the money by $3. Quite simply, the stock price minus the strike. So you've got those $3. Total premium $5.20. Intrinsic value $3. Time value $2.20. Hope that makes sense. You got a 55 call at $1.50. Anybody? Any intrinsic value to a 55 call with the stock trading at 53? Any intrinsic value? Yes or no?
No.
I hear 3 winners. No intrinsic value, correct? So it's all time value, and that time value would be $1.50. All right. So last thing, I'll just go through a quickie quiz. And again, I'm not sure how advanced or not the gang is, but stock price 77. We're talking about a $70 call with a price of $10.50. Is that option in the money, at the money, or out of the money? Any intrinsic value? Well, if it's in the money, there has to be intrinsic value. It's $7. Total value is $10.50. So you're talking about time value of $3.50. So it's really just about understanding the concepts and backing into the numbers. 58.50 stock price, 60 put. Anybody? Is that in or out of the money?
Out of the money.
Okay. And this is where the puts can be confusing, because the put represents the right to sell stock at $60. Stock's 58.5, so it's in the money by $1.50. Okay, and that's just how puts are confusing. It just takes some repetition to get used to it. But and then the difference, would be the 2.25 in time value. So you can have a heck of a lot more time value than intrinsic value. There's no relationship there. Couple more. Stock price 83. 85 call, in or out of the money?
Out.
Agreed, out of the money. So, no intrinsic or time value, all time value in the value of that option. Last, I'm not going to ask you whether the 1250 call is in, at, or out of the money. I think that's pretty straightforward. Is there any intrinsic value with the at the money call?
No.
Exactly. No, there isn't. So, they're just the concepts I wanted to run through. If this is repetitious and boring for some of you because you already know this stuff, I apologize, but we got to start somewhere. Part of the point is just for you to understand that options aren't that complicated. And, that's what I wanted to talk about. Again, you can find us this way. Please do follow us. And I will take any questions or be happy to turn it over to Josh. Any questions?
No, I think that's good.
Okay.
Thank you.
I hope you can hear me all right. I will turn it over to you, Josh.
Okay. Thanks for giving us opportunity here. I'll just run through. So if you guys want to access this platform, just Zachariah, just have a Excel sheet, send it to Joe or myself. You got my email, I think. It's with first name, last name, email, and we can give them complimentary accounts. First off, the overall platform. I'll go through kind of what I think are the most important things, but just kind of walk through. We break it down by analytics. So this is, all the different kind of features, options change. So I'm going to dive into a couple of things before I walk through this that I think are most important for you guys. So first up, I would say is the virtual portfolio. So I already have that open here. So basically this, you'll once you get a demo account, you'll have a default portfolio and you can change parameters about what types of trade and how much money are in there. But when you go in there, basically you can create all different types of trades and track them over time. So I put in 2 trades, just to show you guys. So this first one is a covered call with Tesla. So it was purchased on the 8th. And I sold the 290 strike at March 15th expiration. And you can see when I bought the stock, it was 24.45. And then, current price is 208.8. So if we have a cool little, obviously you get all these different Greeks and, we're not going to go into those, but it gives you a return. It gives you max risk, so you can see, obviously I'm risking, pretty much this amount times 100 and then subtracting whatever premium I got for this call, right? So that's my risk there. And then, after a few days, you can pull up this position analysis and it just gives you a nice layout of here's your call that you sold. You can see the -1, what it costs, the current value, your gain, and then what your max profit is, your max risk, and you got the actual price of Tesla down here with your stock purchase, which is that green line, and then your sell up here, so you can track profit loss over time. So pretty cool analysis. You can do that for every trade. This one, another kind of basic one, a married put. So basically we buy the stock. So bought BABA at 74.76, current price down here. And then we bought basically an at the money put for March 15th. And you can see, obviously, max risk here is only 454, right? So if we pull up this analysis, you can see this cost us 478, the put, our protection put, and the value right now is 818. So we had a nice gain on that. Obviously, the stock has dropped, so you can see the value difference there. But here's our max risk, through March, and you can see the daily profit loss. And the great thing about this platform, just for like learning trading, like you can go back in time, so we can go back and look, on any date, what this thing was looking like on that day. So, pretty cool feature overall. And the same thing, when you just go into portfolio, you can go back to any day, back to 2007. You can create trades and track those. And I'll just walk through real quick how you add a trade. So if we just add a position, so we just have to pick, a symbol that we want to trade. So let's just do Apple. And if we want to do a long call, we have 27 different trades in here. Obviously, some are more advanced, but we'll just start with like a long call, and then we can pick up, you can do any expiration, obviously you want any strike, but if we're just going to do right around the money, the 90, and then you can see right now the mid price, so you had a bid and ask 910 at, and then 920. So the mid is 915, and you can change, quantities if you want to buy two or, however many with, your portfolio cash. So the other real cool thing is you can get alerts on when things hit profit targets. So if you wanted an alert when this hits a 20% profit, you'll get like an email on that. Or if you want to do the same thing on the downside, 20%. So now that'll, anytime those things are hit, you'll get an alert in the system. You can also put in like trading notes down below, why you did trade, things like that. And then, that's pretty much it. And you can just hit save, and that becomes part of your portfolio. So it's just a good trading tool. Going back, like if you have other trades, you can, okay, what if I did an options? What if I did a call instead of buying stock? Just lots of different things you can do with this. All these are end of day quotes. So just take a snapshot. I think like 15 minutes before the close. Eventually we'll move to the 20-minute data, but that's kind of where we're at right now. The other thing is just, so also in here is this kind of, I think, important is this options chain. So you can go in here, same thing with the time machine. You can go all the way back to, what the IPO or, 2007, if it's been around there, and you can pull up any day and look at, the option chains for that. So we'll just pull up 2016. You can pull up quotes from that. So it's a great research tool, for just going back and looking at things. Just like Joe was showing, we have the call on the put side. Here's the strikes. You have bid, ask, and then mid, and then you have your Greeks over here, on each side. So it's a great learning tool. And then open interest volume. And we have that for all the expirations and all the symbols in the system, which is currently 4,056. So just, great tool overall. Just being able to pull up stuff, for those. So that's kind of the basic I wanted to cover. Then I'll just do a quick overview of some of the other tools. Are there any questions about, the virtual portfolio or, the options chains?
So I have a question. So when you buy, sell options, what kind of strategy do you use?
Yeah, so I mean, like when you're adding a position, you have to, basically pick what kind of strategy. And as you become familiar, with options, you'll learn about the different strategies available. That's,
So do you have a strategy that can consistently make money,
that can what?
consistently be profitable? So stock option, the price is very volatile. So what type of strategy that? So we are not looking at make 300% today, then lost like 50% the other day. So we are more interested in a strategy that can consistently profitable.
Mm-hmm.
So what would you recommend?
Well, I mean, the whole thing with options is risk reward and the trade-offs involved with that. So, buying like a long call, that's high risk, right? That's going to fluctuate a lot. Whereas you do like a spread, where you're buying a call and selling a call, that's going to be less volatile than the long call. And bull put, is similar to that, where you're selling a put and buying a put. Um, you know, so there's, all different types of trades. These are kind of like the major ones, but, it's just a matter of kind of getting your head around risk reward and finding the types of trades that you like, that you can actually stomach, because those long calls are very, I mean, those things can be wild swings, especially if you're wrong and it's, you drop like 60% in a day. Yeah, that's hard to stomach, right? So it's just a matter of, we have a great tool to kind of learn. Um, and I'll show you, I had it for later, but this is like a trade scanner. So what you can do here, so these are just like our modeling. It tells you whether it's a bullish or bearish stock, and I'll get into that in a little bit, but so you can try different strategies here, right? And let's just say you want a bull call. You can see down here there's 40 occurrences, right? So this is supposed to be a bullish trade. So you can set up these trades, all different types of ways using Delta, so, you have to kind of learn what you're doing first, right? So, but once you do that, then you can really get into basically risk reward trade-offs. Like, okay, I'm looking for a 25% profit here. And then, what if I change my days expiration? What if I changed how long I hold the position? If I hold it longer, what if I change my profit target? What if I change the strikes at, that I'm selling at? What if I'm just, so there's all these little levers, that, that you can do, and, it'll give you basically, the results here down below to see, okay, this works better, this works. I don't know if you can find like the optimal trade or whatnot, but it's just like a great tool just to kind of learn, get instant feedback. Okay, what if I, just move up my delta higher or lower? Like, so, and you just kind of learn like instant feedback. Okay, like, I'm selling at a lower delta, or, you can see my profit, my loss, got almost back to break even. It's not, maybe this isn't a great trade, but, you can go to the next symbol, you can try that. So it's just a matter of kind of applying these. You can do the same thing in virtual portfolio. You can go back in time and apply, like bull call and bull put and a long call, all for the same stock, and you'll see how those perform over a time period. Does that give you a a start?
So are you guys done with it, or
What's that?
what you said?
I said, did that answer the question yet?
Yeah.
Okay. Okay, well, I'm gonna run just a couple more things about the platform, and then we can wrap up. So the other thing we have is state modeling. So basically it's an algorithm that our CEO created. So, we have 8 different states. Anything green or odd, that's a bullish state. So 1 is the most bullish. And then, the bearish states are even in red. So, and 8 is the most bearish. So 2 is like slightly bearish. 8 is very, very bearish. That's like where new lows happen. Like state 1, very bullish. That's where like new all-time high type things happen. So, and we track all this like market, excuse me, market pulse. It'll give you a snapshot of everything in the system. So you can see there's 4,056 different symbols in here. And, last week it was 27% bearish, and now it's 40%. So, this thing usually gives you an indication of which way market's kind of swaying. Just real quick snapshot. So this is SPX. So this went into a state 1, 1114, and you can see we give on average how long it's going to be in there, the average move, the current move, and then whether things have been met, how often this has happened. So the key thing here are these levels that you see. So like the entry price, that's going to be a support level. Like up here between 1 and 2 targets, that's going to be a resistance. And then 3 is going to be a resistance. So kind of normally goes like this. And then, maybe 30% of the time it'll go higher. If it can turn that top into support, which it just like looks like it did here. And then, the other times it's going to pull back into state 2 after that. So this one has been a pretty good one. But what we look for also kind of longer term is stocks did go in 1 and then like a pullback 2, 1, 2. I can pull it back further to see this one. Like here, this is like super bullish, right? So it's just 1, 2, 1, 2, just going up and up and up, 1, 2. And that's kind of what we look for on that end. And then, flip side, it's kind of like the puts. We have the bearish states. This is XLE, same kind of statistic. So all symbols in the system get this, like they're in one of the 8 states at all times. And then, they'll transition from one to the other. So this is just bearish. So we just have the targets on the bottom and the stop on the top. So these, so you just flip everything. These are support level. With 3 being the most important on any state that we see there. So that's just a quick. Any questions on that?
Nope.
Okay. All right. Just the other, I'll just kind of run through tabs. So, Market Pulse, we have all the charts for that. Analysis that has like insider trading and past news. So all these things you can go back in time too and look. So you want to find Apple news and 2017, you can pull it up in this analysis screen. We have a screener for all like technical indicators. Same thing, you can go back in time. Sector analysis, fundamental analysis. There's a lot of stuff in here, obviously. Click on the earnings. It's not going to pull up there. Sorry. It's got an ETF saved. Let me pull it up. These are all like, we have trades that we put out for earnings, and you get those in these trade alerts. And it's based off of like basically different characteristics that happen around earnings for certain stocks. Some may run up, the price may run up or run down prior to earnings. We have more advanced trades where the stock doesn't move around earnings, so it stays within these expected moves. Seasonality, it runs up or down after earnings, and then so just have all these kind of cool charts, and you can find different trades in here. So they said we do have earnings trades, so those will come out in the morning or afternoon. And they're just based off of these type of trades. So we do all the research, put those out. We also have systematic. So we have a whole back testing. Obviously, we're not going to get into that, but you can back test options trades going back to 07. With a variety of different indicators, and the YouTube channel has all the help videos in there. There's a playlist for new member orientation, so that'll walk you through a bunch of that stuff also.
Josh, we got like 5 minutes if you wanna start
Mhm.
wrapping up, maybe.
Okay, yeah, I think that's it. I mean, there's lots of different capabilities in here, and there's a help link, and then the videos will help you also. So I'll just wrap it up there. I'll turn over Joe and see if you guys have any questions on that.
Yeah, I hope this is worth your while. You never know till you try something. So, please let us know whether, you want to do, stuff like this. We can get, more into the options education side of the platform. Just, we appreciate the opportunity to talk to you a little bit.
Thanks, Joe. I will send the Excel sheet if anybody's interested in joining the platform to just look around what they went through, like for a virtual portfolio if you want to see how trade works. They got the credit scanner if you want to see how the profit works, just to get an experience about it. You want to put a call or buy, sell. So yeah, that was great, Josh and Joe. Thank you for all that. I'll keep updated you with everything, and I'll share with you all the members who want to get access to the platform. So, yeah, very
Okay.
much.
Thank you.
Thank you.
Thank you.
Thanks very much. We'll talk to you again, and maybe we'll see some of you in